Okay, guys, it is Thursday, October the 29th, 2020, and it's almost noon Mountain Time, just a little bit more than 2 hours left in the trading session, and we're looking at doing an earnings play on Twitter, ticker symbol TWTR. Twitter reports earnings after the market close today, so this is a trade that we're going to put on right now with about 2 hours left in the trading day. And then we should see the result right after the market closes and we get this announcement. I think it's about 15-20 minutes after the market closed that we're expecting the announcement. Massive, massive implied volatility here in Twitter, 200+%. You can see the expected range here. Right now, Twitter's trading around 53 bucks a share. Looks to trade all the way down to 46 and all the way up to about 60. This is going to be a naked credit strangle that I'm looking at putting on here. Looking at selling the 66 strike price calls and selling the 42 strike price puts. Okay, a little bit of a skew there to the upside. You can see if you look at it in a risk curve that it looks pretty equidistant. It is a pretty equidistant in terms of pricing. But if you look at the cost of the options, you can obviously see which direction the market makers believe this thing is going to pop. 23 cents right now is the price on my puts and 35 cents on the calls. I'm going to try to get this mid price here of 60 cents. That's about a $60,000 trade, bringing in a credit of $6,700. Obviously, I'm not going to capture all of that. I'm just going to wait for the earnings results to happen. And we'll see where we land after the bell. So I'm going to send that at 60 cents. And I'm going to try to be patient with this. I've seen it as high as 64 cents just a little bit ago. Let's put Twitter in there. So I'm going to try to be patient with this guy. Like I say, 2 hours until the closing bell. And generally we see a little bit of a ramp of IV. We're already sky high on the IV on this, but we might get a little bit extra ramp here going in to the close. So I'm going to sit here at this 60 cent price, give it maybe an hour, and then we'll come back and readjust if we need to. Order is still sitting here. It's 12:03, so it's been about 18 minutes or so since I put this order in. Still asking 60 cents is what I'm trying to get filled at as a credit. Mid price is still showing 61 cents. I think I'm about 3 cents off. If I'm looking at the bid-ask spreads on this, I think I'm about 3 cents off. So I don't know if that doesn't sound like a lot, but it's a lot in trying to move this that much. I've got a little less than 2 hours left till the close today. So I've still got some time. So I'm going to let this continue to work here for just a little bit. All right, guys, it's 12:07. I just don't think I'm going to get this filled at 60 cents. As much as I would like to, I would love to get it at 60 cents. I don't think it's going to happen. So I'm going to try 59. Nap price is 56. Mid price is 60. So I'm going to try 59. And we'll let that sit for just a second here. It doesn't look like that's going to go. Really do not want to go all the way down to the nap price. Let's try 58. I think we are a 3 cent differential, and we've got the mid price bouncing around between 59 and 60. So that means I'm 1 to 2 pennies off, I believe. It's a big order. See, there's 61. I saw 61 on the mid price. Man, that's I'm at 58 cents and it's showing the nap price at 58 cents. There we go. There's the fill at 58 cents. Man, that was hard fought. That was hard fought, but we're in at 58 cents on the trade. There's the position right there. And we'll see. We'll see here. We can look at it right now in the curve and see what the range is. So it's got a little bit, it's a little skewed to the bullish side, to the call side. A little bit more upside there than downside. So we'll see here after the close where we end up at. I would anticipate, again, this was about a $60,000 trade, $59,000 trade, bringing in about $6,500 of extrinsic value on this trade. And so if I could capture even 2,000 or 3,000 of that, even 3,000 might be aggressive, maybe 2,000 at the open tomorrow morning, that'd be awesome. That'd be awesome. So we'll see where we'll come back here and revisit this after the market closes, kind of see what the gap or what the move initially at least is. So it kind of bums me out, of course. Right after I fill my trade at 58, the net price goes to 63, mid price 67. I don't really have any more buying power to average into this trade, but I'm going to try some at 64 and see if I can just add a little bit to that. So that might not go. Let me try one contract and see if we can get anything extra. That's a big difference. 58 to 64 is a big difference on my fill. And unfortunately, I had used up all of my buying power, so I was only able to add one more contract, one more measly contract to my 113 contracts. But nevertheless, we are in. We are in here. And so we're waiting patiently. About an hour and a half from now, we should get results and get a pretty good idea of where we'll fall into this trade tomorrow morning at the open. So this can be a good example, guys, of how important IV or implied volatility is in your trades and how it affects your options premium pricing. This thing had sat at 60 cents all day long, and I eventually had to drop it down to 58 cents to get it filled. Right after that, as soon as I did that, obviously it popped up. I got a little teeny tiny fill, one extra contract on top of my 113, so that's not a big deal. At 64 cents, take a look at this now. If we do a similar order now, 74 cents. 74 cents is the mid price on this right now. That's a ton of money on that differential there. So again, what does it put us at? Well, it puts us down $1,800 on the position right now. Again, we've got a big vol crush coming. We've got a big volatility crush coming. So the key, again, really is not so much that pricing, so much as it is where do we end up here inside of this curve, right? And if we look at it on the chart, that might be a little bit easier. There's my put leg right there. There's my call leg right there. About an hour and 20 minutes away or so before we see what the at least the initial move is. There can always be some additional movement, obviously, tomorrow morning when the market opens up. But generally speaking, what you see after market hours, that's kind of what you're going to get the next morning. So again, a little less than 2 hours out, we'll kind of see where we're at. Okay, guys, it is 20 seconds. 20 seconds away from the market close. And yeah, we did not get the best of fills on this thing. Price really hasn't changed. I think that Twitter was maybe up like $4 or so when I got my fill on these positions. You can see right now, overall position there. There's the close. Down like $1,800 right now, but just ridiculous amounts of theta, ridiculous amounts of extrinsic value out there. It's all extrinsic value at this point, right? And so we just need to wait here. It's probably going to be 15-20 minutes before we get the announcement on Twitter. We'll see that move in the aftermarket. And again, just to refresh your memory there, let's put our legs back in here where we can see them. There's the put leg down there at 42, I believe, is where our put leg is. And 66, way up here, Way up there. There's our call leg. So we finished the day not quite equidistant, but pretty darn close. You can see it there in the risk graph. Got a little bit more of a safety margin to the upside than the downside. That's probably how I would like it. If I had to wager a guess, I would guess that it would probably surprise to the upside. That doesn't necessarily mean that the stock's going to gap to the upside, but that would be my inclination or my belief. And again, we're well within the expected range of movement here. I think probably an outlier move would be something around 20%. So I'm looking for a move of 20% in the stock or less. If we get that move of 20% or less, we should have a nice profit showing here. So we will we'll be back here when we get the announcement. And the news is out. So Twitter crushed it on third quarter earnings estimates, but falls short on growth. I don't know what that says right there. I don't know what that says, Wayne. That's your CEO. That's the picture of your CEO of your company. Anyway, earnings per share, 19 cents adjusted versus the 6 cents, which was expected. Absolutely blew that away. And almost $1 billion in revenue versus almost 800 million of expected. But Twitter growth was up by just 1 million from the last quarter to 187 million. So that was way, way shy of the 195 million that they were expecting. That's got Twitter falling here in the aftermarket. We're down to about 48 bucks a share right now. Of course, our put leg here, where is our position here? Our put leg's in at 42. So we got to stay above that 42 level for us to obviously be in the profit zone. Looks like we're pretty safe right now. Looks like we're going to be sitting pretty well with this trade going into tomorrow morning. So we'll let this trade here for just a little bit in the aftermarket, kind of see where it settles, and then kind of give us an anticipation maybe of where we're going to go tomorrow. Just FYI for you on this trade, we want to remember again these numbers, because this really is, that's what this is about. This is about a volatility crush, right? This is about selling really, really, really expensive options and then having that volatility crush come down and just suck that premium out of those trades. You can see the at-the-money options when we closed, which was around 52.5 bucks. We're now down around 47. But when we were around 52 bucks, that was 250 plus percent. 250%. You're going to watch that IV drop by well over a half tomorrow morning when we open up. So it will be interesting to see where we shake out today in the aftermarket, and of course where we open up tomorrow. We again, our critical number, we need to be above that 42 level. That's critical for us. Right now sitting about 48. So far, so good in the trade. We will check in tomorrow morning, guys. All right, it is Friday morning, 7:14 a.m. Mountain Time, and so we're about 15, 16 minutes away from the market open, and you can see we got a big move in Twitter. Big move. 52.43 was what we closed at. We're down in the 44s now. And of course, our lower strike price is 42. This should result in a decent profit for us. So obviously, it's already showing a little bit up on the day today. That's just on a preliminary quote. But we got that horrible fill yesterday, right? So we were down almost $2,000 yesterday just on our horrible fills. Again, let's look at the fills. I think that by the end of the day, so you can see basically my full position was in at 58 cents. I got one extra contract on top of that in at 64. But essentially in at 58 cents. And that thing went up to like 70 something cents credit-wise at the end of the day. So did not get a very good fill, but obviously we're above our strike price there. And yesterday, here's obviously the determining factor. Over 300%. over 300% implied volatility on this darn thing. And so, you can model inside of your portfolio here. We can go to today, which is expiration day, and you can model down right here. You could model down your implied volatility to what it probably should be, which is under 100 today, and you'll see that it will move us theoretically into a nice profit zone. So that's what I'm anticipating here at the open, and just looking at an exit. We're just looking at an exit here at the open, and as I said before, my goal with this would be to get a couple $1,000 profit. There's $8,300 of extrinsic value. We brought in $6,600 of extrinsic value on this trade. $8,300 sitting out there right now. So I would assume if we can get that volatility crush that we're hoping for, that this will pop right here at the open. This will pop to a nice profit for us. Again, assuming that we stay above that 42 level, which it looks like it is right now. Less than 15 minutes to go here. So we will wait here for just a little bit until we get to the open. Okay, we're about 20 seconds away from the market open here, showing a bid of about 44.50 right now. Got a strong bid on it. Our put leg again is at 42. We'll see that open here just momentarily. It's going to be interesting to see. So there's the open. It's going to be interesting to see what the implied volatility drops down to on this today. So we're getting some quotes flowing through here. There you go. You can see Twitter is now down $8 on the day. And we'll see here. We'll see. It'll be interesting to see what the volatility moves to on this. Let's see if we can take a look at implied volatility. It's still showing the same. It hasn't really changed yet. So we'll get that change here as the quotes start to flow in. Okay. So it's starting to click in now here a little bit. We're down now below 44, but of course we popped about 3,400 on the day. So we are showing about a $1,200, just above $1,000 profit on this right now, with $5,000 of theta still sitting in there. Up to about $1,400 of profit now. So we'll watch this here for just a little bit here this morning. See if we can hold this level or if we're going to continue to break down. Obviously, we don't want to give away that profit. Up to $1,600 now profit on that. And again, $5,000 of potential profit still sitting in that. So we'll watch this for just a little bit. Up to $2,200 of profit right now. We're about 5 minutes now into the open and showing about $3,600 profit now on the Twitter. Up to, well, there's $3,800, almost to the $4,000 level. Still a couple of thousand of dollars of extrinsic value there. So we'll watch it here for just a little bit longer. What a bummer though to get that horrible fill on that trade. We could be up obviously $6,000 on the day, but we gave up about $2,000 on just that horrible fill yesterday. But again, now showing up $4,100 as we speak. Up about $5,000 now on this position. About $1,400 of extrinsic value left. We're getting close here to an exit point. We're getting close. We're not going to suck up all of that extrinsic value here, obviously, in the first couple of minutes of trading. That's just not going to happen. But up $5,000 on the day for that. That's a pretty solid trade. You want to know, again, what is the driving force here? What makes this trade work? There you go. Look at the implied volatility. We've gone from a 300% implied volatility down to an at-the-money 80% implied volatility. That's what makes this trade work. That's how you can have a drop of $8 and still come out tremendously profitable on this trade, is because of the way that theta works. So I'd love to get a little bit more than, you're always a little greedy. I'd love to get a little bit more than $5,000 in my pocket. On the trade here, I might actually put in a sell order here to get out of this. There's still a little bit of actual extrinsic value there in those 66 strike calls, which is sort of surprising. So yeah, I'm going to let this just sit for just a titch longer. All right, I'm pretty much done with this trade. We're up 4,500 bucks right now. I'm going to go ahead and exit out of this. And let's just take our money and run. Try to get out at 20 cents. Still not going at 21 cents. Let's pump it up here. There we get a partial fill. Let that sit for just a minute. Another partial fill, another partial fill. It's a lot of contracts. I got 114 contracts to fill. So it might take a little bit here. I've filled 44 of the 114. That price is starting to drop now. A little bit more. Filled 2 more contracts, and I got 46 of the 114 closed. Going to be patient here. I mean, prices are still slipping. That's not helping our cause. $56 of the 114. $66 of the 114. As long as this price doesn't completely fall out of bed, which it's starting to right now, I think we can get a fill on this. We were at 6. We've got 66. Now 69 of 114. That's really starting to accelerate now. I'm going to go ahead and replace this remaining order up to 31. See if I can get filled out of that. And I do get filled out with the remaining of that. So there we go. We are out of the trade. All out, folks. So there you go. About a $4,800 profit on a $60,000 investment overnight. Not too shabby. Not too bad of a trade. Hope you enjoyed it. Talk to you soon.